So we got a follow-through day on the follow-through day today, if that makes any sense to you. If not, it will. We need to talk about the general market. It sure looks like a new bear market rally has started. Let's talk about what the heck a follow-through day is. Let me show you it on the SP 500 chart and to a lesser extent on the Nasdaq. Let's talk about where the general market goes from here. And let me give you some good news, bad news to temper your enthusiasm. Let's talk about this squiggly line up here. What the heck is that? And if you make it through all of that, let me share with you a stable healthcare stock with a great chart that I am just accumulating as we speak. So in order to understand this, we need to go back 2 videos ago. So 2 videos ago in my market videos, I talked about the stealth correction and how the market has been correcting for like a year prior to the indexes, SP 500 and Nasdaq, rolling over, and therefore we're much closer to the bottom than most of the pundits were prognosticating. Then in the second video, we talked about this big bullish engulfing day. See this huge white candle? That's called a bullish engulfing day. It engulfed the previous 3 days, previous 3 candles on big volume, and that is a sign of a near-term bottom in an individual stock and in an index. So we call that, I guess I'm launching into what is a follow-through day. We call that the attempt, day 1 of the rally attempt. And then you ignore day 2 and day 3. And then the follow-through day happens day 4 or later. It's got to be an increase of, now percentages vary depending on what website you read. I go by O'Neill, and please correct me if I'm wrong. I think it's an increase of 1.5% in price, and the volume needs to be considerably higher than the previous day. So day 1, day 2, day 3, day 4. This was a big up day, but volume was tepid. Now I got to recount. Doggone it. Day 1, day 2, day 3, day 4, day 5, day 6. And on day 7, we had this big up day, 2.5%. Volume was clearly higher than the prior day. It also was a bullish engulfing day. And that is what is known as our follow-through day. Now, what we didn't want to see immediately after the follow-through day was distribution. That is, the mutual funds taking advantage of this small little multi-day rally to sell into strength once again. And we didn't see that. And so what we want to see now is obviously a continuation of this new little uptrend. We don't want to see any big distribution days, although that wouldn't be the end of the world. And in fact, what we don't want to see, we don't really want to see a bunch of up bars in a row. We'd really like to see it come up at more of a 45-degree angle. So where do we go from here? Oh, now let me show you the Nasdaq too. And I guess I should mention, this isn't financial advice. This is just for entertainment, just for education. I've been studying the market since 1996 when I opened my E-Trade account, and I've learned a thing or two along the way, but I'm not a financial advisor. And also keep in mind, fundamental news trumps all technicals. If the Fed says something drastic tomorrow, or something dramatic happens in the Ukraine or elsewhere, then all of this technical analysis will be moot, and the market will react to the fundamental news. This is the Nasdaq, and again, we had a great big bullish engulfing day, and then we had a few trial days, and then we had the same big up day as the S&P 500, but we didn't quite have the volume, so we really couldn't call that a follow-through day on the Nasdaq. But the good news is you only need it in the S&P 500 or the Nasdaq. Some people say that the Dow counts as well, but personally I like to see it in the Nasdaq or the S&P 500, preferably both. Now, what I wanted to show you, even though this technically wasn't a follow-through day on the Nasdaq because of the volume, we see something else. This is the a visual, this squiggly line is a visual indication of the number of Nasdaq stocks above their 200-day moving averages. That's kind of a rule of thumb. If a stock is above its 200-day moving average, then it's considered in an uptrend. If it's beneath its moving average, then it is in a downtrend. Did I say that right? I might have confused myself. And as you can see, for the last few months, the Nasdaq has been coming down, and the number of Nasdaq stocks beneath the 200-day was falling. And at its, what is the word? Nadir, I think. The number of Nasdaq stocks above their 200-day moving average was a paltry like 10%. But then, starting in July, interesting thing happened. Even though the market continued to sell off here or retest prior lows, we see that the number of stocks above their 200 days steadily increased. That's a really good sign. That means more and more of the stocks are above their uptrends, not just the big caps. You see, these indexes are weighted. The big cap stocks affect the index more than the small cap stocks. So this is a better indication of the health of the general market. If we look at the S&P 500, we don't have quite as pronounced of an uptrend as far as S&P 500 stocks above their 200-day moving average, but it definitely looks like it's bottomed out, and the last week or so, certainly that is improving. So let's talk about where the markets go from here. Then let me give you some good news, bad news to temper your enthusiasm so you don't go rush out and buy the farm or sell the farm and put it all in stocks right now. So this is probably just going to be, we are not going to see a run up the right side like we did in the COVID rally in 2020. At least I don't think we are. What is more probable is we see a run back up to the 200-day, and I would not be surprised if it pauses or rolls over exactly at the 200-day, much like it did here in mid-August. This is the S&P 500 again. We see the 200-day is still in a downtrend, and the 50-day is really in a downtrend. That's what's known as an angle warning. That's a Mark Minervini term. You want everything moving up. You want the chart moving up, and you want both of the moving averages going up. That tells us that we are in a solid uptrend. If the moving averages are heading down while the price is moving up, then we are more likely to fizzle out when it hits the 200-day and or 50-day. Now, ideally, we'd like it to just pause here and slide sideways and then continue up, but it's possible that it rolls over again and retests the prior lows once more. So yeah, in my second video, the video prior to this, I said that the markets probably would only pull back 5 to 10% beneath the low, and I think that is what happened, isn't it? Let's take a look. Yeah, that one's about 4%. I think the Nasdaq is about the same. So we need to temper our enthusiasm because we are going to hit some turbulence when we hit the 200-day, most likely. And also, okay, so here's the good news. The good news is a whole bunch of stocks are breaking out. I had alerts set for buy points for a bunch of stocks, and they were going off like blinking lights like a Christmas tree, so to speak. There were a whole bunch of stocks that broke out Friday and again today, and those breakouts aren't popping and dropping like they have been for so long this year. They seem to be extending, which is really good, and I could show you a bunch of those, but we don't have time for that. That's the good news. The bad news is the proliferation of breakouts is really narrow. the most prevalent area of breakouts is the energy stocks. And the energy stocks, they're kind of having a second renaissance here. A lot of them broke out and ran for a few months and then set up, and now they're breaking out again. The problem with this is, one, energy stocks are very cyclical. They don't just go up and to the right for years like, say, an Amazon did, but rather they go up and down like a roller coaster. Look at a long-term chart of Exxon or something if you don't believe me. So we want to see, we don't want to see the energy stocks leading the market. And the other big category that's leading the market is healthcare, which are kind of slow-growing stocks, pretty humdrum, single-digit earnings and revenue. And they're very tradable, but you're not going to see the 1,000% moves in a year like we saw with Tesla, for example. And then another area of proliferating breakouts is defensive, Hershey's, Hostess, Pepsi, and those are tradable again, or maybe good long-term holds, but that's not where the huge gains are made. There are a bunch of biotechs breaking out, and those can make big moves in a hurry. Those are very volatile, however, and more susceptible to sudden gap downs and breakdowns to the downside. What we really want to see is proliferation of breakouts in retail and tech, and those are few and far between right now. So, what do we do? Well, in my last video, I said it was time to buy something in a little pilot buy. So hopefully you bought 1 or 2 or 3 stocks. And now, let's just add to those at proper buy points. Don't just buy more of them if they're extended. But if and when they set up a proper buy point, secondary buy point, add to those, or put on a few more trades, and let's see how they do. You should still be trading, I guess I'll say I am still trading really small. So if your average purchase is generally $1,000, then you just put on a little tiny pilot buy of $250 a few trading sessions ago when we had this big white bullish engulfing candle. And now that we have our follow-through day, if you execute a new trade, so you're at 250, then maybe you do this one at 500 or 600, something like that. I know the FOMO is real. I know if you got a bunch of money on the sidelines, you want to get it all in as soon as you can. If you're sitting on a big loss this year, you want to jump in there with all your money and make it all back. But we've got to be rational. We got to think risk first. We move in progressively. If this rally is for real, and if it's not going to just roll over on the 200-day, we are going to see breakouts happening for weeks, and we will have plenty of time to increase our position size. If you're still hanging around with me, first of all, please like the video if you like the video, and let me show you one of these healthcare stocks. Okay, so this is McKesson Corporation. It's a healthcare company. It distributes specialty healthcare products, medical equipment, and it is making a ton of money, almost $24 per share in 2022. Its relative strength, it is outperforming 97% of the market, and the earnings and sales are good. It's a little bit weaker in this most recent quarter, as has pretty much every stock in the market. But I'll let you look at the numbers yourself here. This is earnings, this is sales, and this is gross margin. And let's just look at this from a technical perspective. So we've got a nice uptrend here, and we can draw a line across the supply. We got a nice textbook double bottom. The second part of the W undercuts the first. We got a little shakeout here, and we've got another little shakeout here. We like to see those shakeouts. We had a great initial buy point, and then I'm trying to draw an arrow here, And it did run up a little bit, and then it just rolled over with the weakness of the market. And so here we have, essentially it just pulled back down to the pivot point, the buy point. And so now we have it making a new run at all-time highs. So the best buy point would have been right there on, what day is that? That is 10/18. But if we're not in there, I actually didn't get in until here, 10/21. But even today, now it's just a little bit stretched. Here's our most recent supply. So if you're not in yet, then we just be patient for a couple of days. Let's see if it'll make, hold on a sec. Let's see if it'll put in a, let's see if it'll make a cap, like so, and then break out. Or maybe it'll pull back into the pattern and make a traditional handle, and then break out like so. Or perhaps, here's the 50-day moving average. Maybe it comes down and it bounces off the 50-day. Any of those buy points, I would feel good. I just bought a little tiny pilot buy, and I would like to add to it if it does one of those things. If it breaks beneath the pattern, well, then suddenly I'm not interested. 5 to 10% stop max. That's it for me, guys. Starting to feel good about the market, and I hope you are too. Hope you're, hope the worst days are over. That's for sure. Take care, everybody.